Happy Monday, guys. What's up? Welcome to the stream. It is Monday, January 24th, and this is Obe TA. Alright, what we do here basically is apply technical analysis to charts, crypto, stocks, commodities, whatever it is, whatever has a chart. We apply the analysis to them, try to spot the what? The mythical edge, right? Right. Alright, for everybody in here, happy to see you. Hope your Monday went well. Hope you had a good weekend. Dude, how about the playoff games, man? Probably the craziest games that I've ever witnessed. Made a little moolah, maybe on a little parlay. I don't know, we're going to keep that on the hush-hush, but yeah, man, had a fun weekend. Good times, good games. It's all you can really ask for, right? Good food, all that stuff. So I hope you guys had a good weekend. But without further ado, let's get into it, man. All right, so we're going to start it off like we always do here with Bitcoin. And I almost feel like this music is a little too upbeat for what we want to talk about here today. But let's talk about where we are right now currently. All right. So at this very moment, we are treating the 886 as that support line, right? See how you come down, you touch it almost perfectly before getting a little relief rally seemingly at the moment. All right. What we need to look at here, because it makes sense that the 886 was going to be a point of reversal. Remember, we talked about it before. You had this little support here from August 3rd at the 786, which it was trying to hold throughout that day. January 21st ultimately failed and went to where it makes more sense, the 886. All right. Oftentimes, it goes through the 786 to the 886. It's just more common for whatever reason. But you came to the 886 and you held the 886. So the daily closed, like 3 hours ago? I know this is a late stream compared to usual, but closed about 3 hours ago with this kind of spinning top hammer type of deal. What you like about this candle is the long lower wick. All right, so it got as low on the day as 32, about 33,000 before coming back up and inevitably closing at like 36. So, I mean, it's like a $3,000 swing throughout the day. Just volatility, man. Just craziness. But ultimately holding the 886 line. So what you're probably going to get here, because there is no divergence on the MACD anymore. You had double going on, and there's no divergence on the RSI. So while you're getting some relief here, and if you're questioning whether or not this is the bottom for it to reverse the trend, which is ultimately what you want as far as the conversation of getting to all-time highs and stuff like that, you're probably not going to get it on this relief rally. Ultimately, what you'll probably see, as you often do, is just a 50% retrace from the high point that you had to the low point. All right. If that is the case, like it has been many, many times in the past, that's 50% there, 50% there. All right. If that is the case, that would get you to about 38.8, maybe 40,000, right? That's going to be the zone. 40,000 also having the 618 on it. It could potentially get in that zone as a little relief rally, right? Ultimately, what it would do, and this is based on the fact that we don't have any divergence or anything. It's just a level of support. Ultimately, you come up, you touch it, reject off of it, and come down to test this again, all right? And just look in history here. It comes down, it makes a relief rally, it comes down, and if it holds the rally, or holds that level when it comes back to test it, in this case it would be 33,000. If in fact this is the bottom, this over here is where we're looking to potentially get in, right? We want a bullish engulfing candle with divergence, right? You had it here, you had it on the RSI, showing the seller exhaustion, all that stuff. So that's what we want to see. This little rally makes sense at a support level and then come down and hold that support before running. Is it going to get that? I mean, probably not, dude. And hold on, I can't do this right now. It's too upbeat, man. It's too upbeat. I'm not in that kind of mood. I'm just trying to chill.
Frosty!
Need a drink. Dude, the music's got me all dry mouth thirsty. It's too much. Let me make sure this isn't too loud, too. Hold on a sec. Nah, it should be good. Alright. So, what was I saying? Yeah. Might get a little relief rally here. Right? So, might come up to this zone before inevitably selling off from it, coming back down to hold and test this level. Okay, you're not making the rally without divergence, anything like that. And even up here, right, you even had divergence going on in the MACD and you were still just making the lower highs, right? So at this point, you don't even have any of that. There's no edge. There's nothing implying major reversal. You're just at the 886, cool. But ultimately, probably coming back down to test it again. And really, it's like, let's just go to 30,000. Right? Why are we not at 30,000 yet? Like, let's just get to 30,000. That's the major level of support. I mean, you could just see it from history. Touched multiple times, held as support, and it would be the full reset from July, back to this level. Now, here's what I want to talk about. Here's what the title of the chapter is, why I have some Russian dolls up on the thumbnail. And this is kind of just a thought experiment, I guess. Not saying this is going to happen. In my opinion, if we were to enter into a bear market, this is like a nice theory, all right? And what I'm calling it, I guess I'm calling it like the head and shouldersception, maybe, all right? So I know it maybe looks a little bit like what the hell is going on here. Let me dive into it and just explain my thought process, all right? So what I'm seeing here, all right, we're looking at the daily, and this is on Bitcoin, all right? What I'm seeing is just this head and shoulders type of structure, right? With 40,000 being a neckline. Now, when you really zoom out, it almost appears that you've got another neckline. If we're counting these, like you just make it kind of a bigger structure at that point. Then it's almost like you've got the head and you had the head and shoulders with the 40K neckline, and it's been broken, right? So now the next neckline is going to be down at 30,000. But what we have here, as far as structures like this, and this is Polkowski stuff, you have what's called the measured move, which is ultimately when you have a structure, the amount that you can expect oftentimes for price to move after the structure has been completed, right? In this case, when the neckline gets broken on a head and shoulders, the pattern's considered complete. And then you can use what's called the measured move to try and determine where it's going to stop. So if this theory holds true, what is happening essentially is the measured move is going to be a measurement from the neckline, right? The base to the tip of the head. And then what you do is you just copy this, right? And apply it to the neckline below. All right, that'll give you your measured move. And the end of the box is where the measured move ends. That's where price, according to this, would go. So what happens here, the problem with this measured move is that if you're following that line of thinking, the measured move from the small head and shoulder structure is going to send you to $23,804. Okay? So if you're following the measured move rule, right? It doesn't always play out, and I'm not here saying that this is what's going to happen. This is kind of just a scenario. But just follow me through it, all right? You break the 40K neckline, measured move down to 23,804. At that point, that measured move is going to put you down through the neckline of the $30,000 head and shoulders, like the mega head and shoulder structure, if you want to call it that, right? 40K was like junior, 30K is like senior, mega, whatever. So what you would do at that point is measure the measured move, right? The measured move would be from the $30,000 neckline to the head at 69K. You would copy and paste, right? And bring it down to the neckline of 30,000. All right, and that would give you your second measured move from that structure, right? So where would that get you? That brings you down to about $12,500. Okay, I'll get it, dude. It's like...
Hold up. Wait a minute. Something ain't right.
It sounds like it couldn't happen. That sounds unreal, right? So the reason that I say this theory here, I guess, is... Let's get hindsight in here, man. We need hindsight in here. All right. So if we go back in history here, all right, the bear market of 2018, okay? Ultimately, you had a pull down from the high at 20,000. That was the run up from 2017 to the low in, December 10th of 2018, right? That was the bottom. In that bear market, which lasted, what was that, about a year before kind of starting to get its footing and head back towards the upside, lasted about a year. You were down about 84% off the high. So if we're going with the line of thinking here, just based off of historical context, that a bear market would do something similar and move you off of 69,000 about 80%, let's say, 80%, 82%, gets you right down to that second measured move after the mega head and shoulders and puts you at 12,510. Also, 12,510 has historical support, and it's not just like, oh, look, one inflection point, right? It's been touched a few times. Even as far as back, it didn't quite get there. It was like 11.9, but ultimately like 12,000, right? And it was touched there as well. So 12,000 is definitely a historical horizontal support line. And to boot, if we go from the COVID crash, the COVID low to the all-time high, the Fibonacci, where is that lining up with, right? Where is it confluent with? The 886. So, look, I'm not here to say that we're going to $12,500, right? That's not what we do here. I'm just saying if, in fact, we are in a true bear market, and in my opinion, if we break 30,000, the argument for that just gets even stronger. But, we're certainly flirting with it. Things don't look good where they currently are. But, breakdown of that. You've got a 786, I guess, here at like 18. 20 is going to act as a form of support. Maybe 20 is the bottom. I don't know. But if we're going to do something similar to what the last real bear market was, then another 80% drawdown from the high to the low puts you down around 12. And it also puts you down around the common 886 retrace, those deep retrace areas. And at that point, dude, that's where the smartest people in the world, IQs of 150 and above, are buying Bitcoin, right? Just like they were back here in December when it was down at $3,129. All right? You've got all the context and all the support in the world down here at 12. At the 886 with this major Fibonacci retrace here. So, yeah, man. I haven't even looked at any other forms of confluency or anything. I mean, maybe we have... Nah, not really. It's in between the 114 and the 1618 from that one, so But I mean, I guess you would be like at this is like a multi-year harmonic, I guess, playing out, right? The shark, like the 1272, and then down to the 886. All right, so you'd even have like a harmonic there at a major harmonic, all kinds of other stuff possibly lining up. So I'm just saying, man, if the bear market comes to fruition and is a reality, do not be shocked by a $12,000 Bitcoin. The same way people were shocked at a $3,000 Bitcoin back here after 2018, all right? I'm just saying that is very possible, but there's a lot of stuff to get through before you get there, all right? You still have 30,000, which is a strong level. You still have 20,000, which I didn't even point out before. 20,000 lines up pretty close to the 786 from the COVID low. So you've got some confluence there. Maybe that's where you get it, the support and the trend reversal. But yeah, I mean, we had an 80% markdown in 2018, and another 80% markdown gets you down to the 886 and to the measured moves of those head and shoulder structures we got going on, right? So just asking questions, right? Just asking questions. All right, hindsight out of here. I don't know. Let me know what you guys think about that. Is that ridiculous? Does it make sense? Do you have any questions about that? Just ask, man. You know, just a thought, right? No need to get upset about it. Just put it in your little memory bank, and you don't be shocked if we see it down there. And just remember, like, what was that dude with that weird hat talking about? He was talking about like 12,000 being at something significant with 12, right? Burn it into your brain. But that's Bitcoin, all right? So long term, if it's a real bear market and these structures are respected, you can see a move down to 12,000. Currently, what it's doing as of right now is kind of anyone's guess. It does seem like you're getting some support at the 886, and you're trying to make a sucker's rally back to 40 perhaps before making another lower high. And I mean, at that time, it'd be, what, 1, 2, 3, 4, your fifth lower high. The markets will be ready to slaughter you at that point. Nobody's going to want to be holding this stuff. You've got, you know, the stuff going on with Ukraine, and just add it to the list, man. China, you want to get on the pile, all right? How's Taiwan looking over there? You ready to start that up, all right? Who else thinks this crap is a diversion, you know, perhaps? Like Russia has the economy, their economy is smaller than California, so do they think they could take us by themselves? Of course not. We would squash them. They're a nuclear power, but they also have China on their side who, you know, is no slouch. So, dude, I don't know, man. I hope stuff calms down, but that's what this is, man. The markets are just uncertainty. Markets and investors, people with lots of money, and this, they hate uncertainty, and they get out before it happens. They got a Fed speech tomorrow talking about rates and stuff like that. Normally, after that stuff comes out, you don't see crazy moves unless they say something totally unprecedented. If he comes out tomorrow and says, "Hey, we're doing a rate hike," you probably won't even see much movement, because people already expected that, and they've already sold in accordance with it, right? It's already priced in, as they would say. So it's all just are we going to go to war? All right, are they going to raise rates? People are asking questions they don't know. So with the possibility of rates going up, the first thing you sell in uncertainty is your most volatile asset, right? And what's the most volatile asset in existence right now?
Okay.
It's crypto. So crypto is going to get hit the hardest, as it always has. And then what's next? Growth stocks, right? Tech, all that kind of stuff. So, dude, it's a ton of fun, right? Tons of fun when it's going up, because it goes up a lot. But it also comes down just as hard, just as fast, just as much. So you got to be prepared for that if you're going to participate in this market, man. It doesn't just go up forever. All right? Take your profits.
Money.
And keep a cool head, right? Again, fundamentally, nothing wrong with the asset. There's no hack. There's no chink in the code or anything. So it goes down to 12,000 and it still has the adoption that we've been seeing. Yeah, I'm buying it all day long down there. I want it to go there. All right, we're talking like a 10-year plan, all day long. All right, but that's Bitcoin. So let's move it to Ethereum, the little brother, right? Doing its own kind of thing. Everything is just kind of hammering, showing these lower wick kind of things. There's no divergence on any of the daily timescales, really. I think there is one that I found on here that has some daily divergence, but nothing on Ethereum. Ethereum actually looking like it's about to do a death cross. So, I mean, that's something to consider. Bitcoin's death cross definitely was adhered to, right? So Ethereum has been selling off a little bit worse than Bitcoin, I believe. But hasn't even death crossed yet. So it's like, yeah, Bitcoin breaks down to 30, Ethereum's breaking down to 2,000. $2,000 is the next stop for Ethereum. All right, you got this inflection point from February 20th, psychological 2,000, and I do believe it is confluent. Yeah, the 886 down there as well, right? So 2,000, a very strong level for Ethereum, and you're most likely going there, but not before maybe a slight rally to this, you know, what was pretty strong support, and just bonk rejecting off and coming down, right? Could see some green tomorrow, right? Don't let that trick you. Just saying.
Hold up. Wait a minute. Something ain't right.
But yeah, so you're at the 786, trying to hold on, and probably going to 2,000. The 886 makes more sense. And then really, you have a strong level of support as well down at 1,700. So break 2,000, next level 1,700, and then below that it's like 1,300, down around the 113. Right, maybe 15 gets a little love. But yeah, dude, what is... I just hit a vein of like over enthusiastic music. This is supposed to be spooky. I'm supposed to be scaring you people. Not really. I'm not trying to scare you guys. I'm just trying to give you potential scenarios, right? And when you don't have divergence or anything like that, and you've got bearish indicators happening, downside continuation seems to be implied, right? Now, if we move it to the 4-hour here, let's take a look. All right, you're seemingly rejecting 2,400, at least, you know, at this very moment, which is just this inflection point back here from July 7th, right? So what should be support and what was support for a little bit, you're back at it, but now potentially regarding it as resistance. So you have an hour and a half to close this candle. The prior one had a little bit of an upper wick, and if you close this below it, it could be right back down to where you came from. But, you know, and really, for Ethereum, if it does its 50% retrace mumbo jumbo, then, I mean, you're getting it back to like 2780. You do have another inflection point here, which is a pretty strong one, at 2600, which is like the 382. So, I mean, the zone to look for if. First, you got to get above literally where you're at right now. Like, you're up against the wall, just bonking your head. If you get above this, then okay, you have a chance probably like around here. All right, that's what I'd say. And then you come back down to try and test and hold this where it touched, right? This 2167 area for a second time, right? Confirm it, and then maybe it looks stronger, and maybe it has some divergence or something at that point. But yeah, that's what I'm seeing here for Ethereum. You liked the last song? I'm just not like, I don't know. I'm not in that mood, really.
Nice.
This isn't supposed to be like an upbeat, happy stream. I mean, that's, I don't know. It distracts me, and it makes me feel like I need to talk faster or something. I don't really know how to explain it. But, so Ethereum does have, you know, playing off of some Class A bullish divergence that was going on the RSI, okay? Lower lows in price, with the higher lows going on the RSI, seemingly maybe starting to pivot back towards the downside before touching that line, maybe continuing back up. But I don't know. I mean, guess we can move it to the hourly to see maybe what's happening here. You got above the 50-day moving average on the hourly before then closing below it, and now kind of indecision with hidden bearish divergence. Yep. Hidden bearish divergence on the MACD. Same high on the RSI, so you could call it Class C hidden bearish divergence. Not really a thing, but Same high on the oscillator with a lower high on price is still a bearish signal, so not good. Continuation down, implied to me, what it seems. Okay. So yeah, that's Ethereum, right? Cool, we'll see. What's the total? Total market cap, $1.61 trillion. Okay. Move it to the daily. Let me clean this up. My goodness. I heard a crash downstairs. I'm going to sound like a laptop. Taylor. But, yeah, taking a look at... Clean this up, man. I feel like I just showed you guys a messy room. Total market cap. All right, just been making lower highs. You've got 4 consecutive lower highs. Death cross. What was that? The 23rd? Was that yesterday? No, it didn't. No, it did not. Are you serious? Oh my god, dude. Well, cool. Now I've got that on my mind. I think my heater might have exploded. Is it on fire? Can you at least let me know that?
Are you guys having a killer time?
All I hear is rustling going on. Alright, we're going to keep it moving. Whether or not it's on fire, I don't know. But let's just keep moving until the house burns down, right? And try and get this done before my internet connection cable catches on fire. Total market cap. Alright, hammer followed by pathetic price action. Right, red crap going on. Move it to the 4 hour. You've got that little upper wick stuff, which is kind of double topping here. Okay, so you might not even get the sucker rally, right? It might be so pathetic that you just come up to meet this high and then reject it and continue on to the downside. And I mean, you do something like that, dude, you're falling straight through whatever support we're looking at. I do believe in this case we're looking at, what is it? We're at the 786 here. Yeah, so you're hanging on to the 786 confluent with this support back from March 24th. That's what you're trying to hang on to. It's again though, it's the 786. And what's more common? The 886. So you might not even get the rally. It looks pretty sad right now. So at that point, you come down to the more common 886 before attempting, and then bonk, make a full reset down at like 1.15 trillion. This level down here, which is just, you know, more obvious. 886 not super confluent with anything. Maybe this inflection point back here from February 27th. I guess I would give you that. But, yeah, this hammer just having pathetic price action. It could be that bearish that you just don't even get the sucker rally this time. And it kind of seems, if you really look at it, it kind of seems like those rallies were losing steam as it came down, right? Do an analysis on that to see if that's true, but it does look like this last little rally was a little weaker. So this one might be even weaker than that. All right, before heading down to more common areas. But, yeah. Again, same kind of deal. Class A bullish divergence on the 4 hour RSI. Nothing on the MACD. So, could be double topping out here. Insert balloon losing air sound effect. But, I don't know. Maybe it also rallies from here, right?
So you're telling me there's a chance?
That's total market cap, though. Alright, I'm concerned about my heater exploding. I don't like hearing that. Especially not while everything is down right now, right? You don't want to pay for an HVAC after Bitcoin just went down 40-50%. Alright, move it to Binance Coin. Another top one. Also at its own little level of support, the 886. Alright, from this low back here. You are at the 886 Fibonacci retrace. You also happen to have a pretty good bullish bat down there. All right, the pattern completion zone of the bullish bat. A lot of assets below Ethereum, ones that were outperformers, Binance Coin being one of them, are starting to get some spooky death crosses showing, right? It's starting to come down to meet it, so it's just another bearish variable to throw on the mix. But I think Binance Coin actually bullishly engulfed. Almost bullishly engulfed, but kind of like a tweezer top at the same time. But kind of a bullish engulfing and before just hammering. So bullish engulfing and then another bullish candle hammer before just selling down at the pattern completion zone of the bat, right? Somewhat divergence, class C on the RSI. That's pathetic. And what are you getting? You're getting a pathetic little bounce. So, I mean, class A bullish divergence potentially. It does look like you could throw you could even do it more so like this. The door flew off somehow. Alright, Taylor, you always use inflammatory language. Because from here it sounded like the heater popped and it actually sounded like an explosion kind of. It didn't just sound like a door falling off onto carpet. So, still suspicious, but I have no choice but to trust you, I guess. You did seemingly on this 4-hour break this RSI, this supply line up here, this upper trend line. You've broken it and you've come down, and maybe you hold it to continue on to try and take 392 again. All right, that is a major level of historical support. All right, touched it many, many times, but ultimately you did rally up at the pattern completion zone and reject off of it. So you treated it as resistance. You might come up, treat it as resistance again tomorrow. If Bitcoin does get a little bit of a sucker rally, you might just come up, treat it again before coming down to, your death. Ultimately, $321.60 is going to be the next level. This inflection point back from September 27th. Bot, hello, good to see you. A regular here in the chat, right? A boom and a go. Probably shouldn't say it out loud in case it's a trap, but you know what? Let's give the bot a spin. Why the hell not? I have a feeling what it's gonna get. Yep, knew it. It's what bots are, dude. Peasants. Not the good kind. Not the kind that wins best turnip at the county fair, the kind that steals your rake. To rake up his donkey poop or something, right? Doesn't tell you about it, just returns it covered in crap. That kind of peasant. But yeah, Binance Coin trying to get a reaction here. Again, if Bitcoin rolls over, it's dead. And it's coming down to 321. And you break 321. Guess the next level. Somewhere down around here, I'd say. In this zone. So you've got an inflection point from July 22nd, and then you've got that 113. So I'd say somewhere like here, you could expect to see some support if you do in fact break down from your current level, and then break down from 321. All right, 256 would be your next level of support. Okay. Sorry to be the bearer of bad news, but again, this is all potentially, right? And this is just based on the fact that you have no divergence or anything where you currently are. So again, you might get a little rally. You're most likely, I don't know why you would ever do something like this off of no divergence or anything like that. That just doesn't make any sense to me. Can anything happen? Sure. It could just reverse here and go nuts, but if we're talking probabilities, odds, which is what we do here, we're just trying to increase that. That's unlikely, right? We don't want to put our money in on unlikely things. So, speaking of unlikely, let's move it to Solana, which Good God, man. Solana, if you're in Solana, you've been getting crushed and you're looking into the abyss. Oh, man. On the weekly, you are officially below, 5 days, 22 hours, right? So, Ryan, calm down. Currently, right now, the weekly is below the 50-day moving average. Toss it on your bearish pile, all right? There is, where you currently are, though, where you closed below your only support over here. Okay, that's an upside down U, but you know what I'm trying to say. You closed below 115 and 100, psychological 100, and there's nothing here. Where is the support on Solana between $58 and $115? There ain't none. I'll save you the headache. There ain't none. There's nothing here. No support. All right, so it makes the most sense for you to come down to $58. All right. And then anything below $58, you're coming to like $22. All right. No, I'm not joking. Okay. It's Solana, right? Solana was a new name that came through the pipeline this year, right? It came out April of 2020. It's like a brand new coin. So don't be shocked that a brand new coin, essentially a startup company, gets back down to levels that make sense, because this stuff didn't really make sense, right? It doesn't make sense for an asset to go up 3,500% over the course of 119 days, like a third of the year, and a third of the year was up 3,300%. Okay, then it, oh my god, it pulled back a little bit. Wow, what a crash. And then it was up another 1,100 over the next another third of the year. So it's like, yeah, the pullback's going to be real. It's fun on the way up, but there's no support on the way down. And there's always a down after an up. It never will go on forever. So, Solana, you had all the time in the world to take some profits on this thing. If you did not, enjoy the ride down. But what we can do at this point, because it seems kind of inevitable, because what you're doing currently right now with Solana is you're trying to hold this little inflection point back here from August 21st, right? The little hill that could, the little inflection point that could. Okay. I do believe it was, what is it, at the 786 or something? Kinda. You're kind of just like holding that support. I don't think... Actually, I think you were. Really, you're in between the 113 and the 1272, so you're kind of just holding on to this shoulder here, with no divergence on the daily, nothing. It's like, yeah, okay, you do have it on the MACD and the RSI on the 4-hour. So again, you could maybe see a little reversal back towards like $100. Now you're gonna have to break 100. Now it'll act as psychological resistance, and even if you do break above it, you might just get back up to the major inflection point here, support at 115 that you dump below, and then you also have the 50-day moving average waiting for you up there, so maybe you even do something like this, right, before coming back down and then heading to 58. Because ultimately, again, a lot of these assets are going to their 886, and I'm not counting this thing as a level of inflection, really. We're talking the low back here at $21, and the 886 lines up with an inflection point from June 7th, right about here. And then it puts you at the pattern completion zone of a pretty beautiful bullish shark harmonic. So that's the thing, man. It's like more downside implied and more pain and suffering. But at the end of it all, you might be in a beautiful spot. Maybe you come down in here, divergence or something, pop, and then you come down and you have like all the divergence in the world, and you get a bullish engulfing candle, and it's just, it makes so much sense for it to reverse there and continue up and beyond and on to wherever. But this is the point of this stuff, is to be prepared if it gets there and starts showing those symbols, right? And being able to have an idea of where you can catch some support, okay? So Solana, you might be in for some serious pain and suffering coming up, but ultimately you could have a beautiful area right here to take a position and make tons of money. So, and then actually take a profit for once. If you're up 1,000%, hey, rule of thumb, if you're up 1,000% in the course of 2 months, maybe sell like a quarter of the position. Right? That's not financial advice, it's just a guy's opinion. Yeah. Super thirsty. The shark! Move to Decentraland. Another one looking kind of interesting. All right, we're going to check in on the meta boys. Decentraland and Sand. So Decentraland at its 200-day moving average on the daily. Okay. Trying to hold the 200-day moving average. This high back here from May 6th of 2021, right? Inflection point before major dump. You are trying to currently hold that as well. So makes sense. You're getting support here. Okay. Do you have divergence on the daily? Nope. Of course, you have it on the 4-hour like most other things. And seemingly, right, trying to find a bottom a little bit locally on the 4-hour. But we'll see, because you are, again, as most coins are, below major levels of support. This low back here from November 10th, right, in a little inflection point. That was your level of support you needed to hold. Once you close below it, boom. Now you're going to treat it as resistance potentially on the way up. If you do, in fact, break it, maybe you get to $2.46, right, the 50% retrace from that high to low. That would be right at these little inflection points back here from November. So you've got some historical resistance, an argument there for it at the 50% retrace to where you come back down. Try to hold this level again. But if you do not, the Fibonacci on this is going to go from this low here, October 27th. So I'm going to take the Fibonacci, bring it to the high. The 886 comes down here to about $1.32. Okay. Which I don't really think is too confluent with any historical support or anything like that. So, I mean, you might just say F the 886 and come straight to this this point before it sell off at like $1.10. All right. What you do have here, though, to clean it up so we could see it, you do have, I believe it was, I do believe that it was Decentraland Mana. I think you've got you're at a 7, you're at a cipher right now, I believe. All right, so we're talking like 618, 1414, pretty close. Okay, cool. And then coming down to the 786. And let's see, hold on. Yeah, 786, like right here. Stop it. There we go. All right, so pattern completion zone of a cipher. Okay, cool. Add it to the argument as to why maybe you're getting some support off this horizontal support. Maybe it should have been stronger. The fact that it's kind of pathetic. And we'll see tomorrow, right? We'll see tomorrow if the buying comes in. But let's see, the 886. 886 makes more sense because now from B to D, you're, no, 1312, like we're looking for the 1272 maybe. Ciphers often turn into sharks, so again, it just makes sense you go to the 886, but, I mean, maybe, right? It's getting pretty close to that support. So what I would do in that case is I would just go ahead, siphon off a little zone, right? From the pattern completion zone to the horizontal support. So down in there, if you do in fact break down below 163, $1.09 has the pattern completion zone of a shark and all that. Maybe, right? 618 A to B, 1414 C, 886. B to D is a little bit but maybe. Argument for it. I hope you've got a little change laying around, all right? Because I'm telling you, man, with the sell-offs and stuff like this, unless it really does go in a full-blown bear market, if we break below 30K, I mean, I don't know, dude, we could be in this for a long time. Year, 2 years, I don't know at that point. But if we do find a bottom at 30,000 or something, and these have sold off below their current supports, this is going to be the level. All right, this is going to be the level that we're going to be looking for something like this. All right, so I'm just saying, don't just abandon crypto and stuff right now. It's the worst time to do that. This is where you need to be paying attention the most and doing the most analysis to make sure you're prepared for when price gets to its level, okay? Because we could add the cipher here and been prepared for it, and then when it gets here, it looks like crap, okay? So we're not just going to take it because it's at the pattern completion zone of a harmonic. We wanted divergence and stuff here, but we don't have it, okay? Until we do, we leave it alone. Or if you want to short it or something, if you're looking to short assets right now, I would definitely give it a day or two to see if you get that sucker rally. And then when you start showing the signs of rejection or getting close to the 50% retrace or something, it makes a lot more sense to take the short then, not after all of major selling showing supportive candlesticks and stuff like that. It doesn't really make sense. You don't want to short the asset at support showing Japanese candlestick reversals at the 200, because it's more likely we get a little bit of a relief before then coming down and continuing. But during this time, you're going to be sweating. All right, you're going to be feeling the heat, the pain. So same reason you don't long an asset after a major, like directly after a major run up. Like you don't long it here because it'll probably pull back before potentially going again. So patience, man. It's the name of the game here. All right, this is what I'm talking about, man. This is the music that just gets me chilling.
Money.
All right, let's take a look at the other meta boy, Sand. I meant to say boy, not poi. Damn it. Stream ruined. Sandbox. All right, the Gartley that almost was, right? Almost perfect. And market conditions just too bearish. Bitcoin had other plans in mind. Potentially, this is still kind of in play almost in a way. But again, I mean, I'm not expecting that Sand is just for whatever reason going to outperform everything else and oh my god, and rally off and then go into the stars. Maybe it does get the reversal here before coming down and making a lower high than here. Again, you've got variables implying you could get a slight rally, but that would get you up to like $3.87. 50% retrace, common in bearish conditions, making consecutive lower highs. So, thumb up, 50% retrace, another lower high before heading down to the X point, this inflection point, which would be $1.98, like $2 psychological at that point. And you break that, you're going to $1.19. And that's not a fun swing. That's like 40%. Okay, so if you didn't take profits on Sand when it was doing this crap, when will you take profits? You know what I mean? You'll never take profits. If you don't take profits after an asset is up 300% in the course of 10 days, you will never take profits. Do you understand what I'm saying? And yeah, maybe then it comes down here and goes up another 300, but dude, who cares, right? You won. You're up 300% in 10 days. Do you know how long it takes to get 300% from like the S&P 500? If you're assuming like 10% a year, is that 30 years? Don't be greedy.
Yeah, I've been immunized.
Nice.
Okay. So, yeah, maybe this turns into a bat. Well, never mind. Can't be a bat. Bat can only go to the 50% retrace, so... maybe it turns into a crab. Where would that put you? Could it even be? Whoa! 1618. Oh god, this is getting silly. I can't even get it down to the 1618. I guess it doesn't go that far because it would be 0, I guess. From that point. 2618 and the 1272 puts you down around 25 cents. Huh. Interesting. Stop it. But yeah. Let me put that back, just because it was so nice. But again, no divergence or anything yet. We have it on the 4-hour RSI, alright? It's repetitive at this point, but, yeah. Major resistance ahead. $3.35. Support at $2. Okay. Sandbox.
Are you not entertained?
If you guys are in here, if anybody's in here, or if you're watching this later, if you could go ahead, hit the like button, subscribe button, jump in the Discord, post the link at the top, at the beginning. Join the community, man. Come hang out. Come learn this stuff, right? It's pretty cool. It's pretty cool. Dude, I can't tell you how excited I was getting with the Bitcoin head and shoulders thing. I was just like, oh my god, and it was just like, the measure move lines up with the 886. Oh my god. I don't know. Maybe that I'm just kind of dorky with this stuff, which I know I am, but it was just like one thing after another. It was like the measured move of this one gets it to here, and then the measured move of that one gets it to here, which is at the 886 from the COVID low, which lines up with historical support. Oh my god. It's also 80% off from the top, just like the 2018 bear market. This is the bear market scenario. You know what I mean? I felt like Sherlock Holmes up in this bitch. But maybe that doesn't happen at all. Maybe it just goes to 30. But it's just fun to play around with this stuff, man. And I want to hear what you guys think about that. Is it not a head and shoulders, right? Maybe it's not. Maybe it's not a double head and shoulders. Maybe that's just not even a thing. You got to pick one or the other. I don't know. But yeah, join the community, join the Discord. We're in there 24/7, and yeah, come hang out, man. It's a good time. Let's take a look at Cardano. On the daily, actually has some RSI. Well, had some. Was trying to develop some RSI divergence. Okay, and the reason for that, why this is different, is just because of how strong a dollar is for Cardano. A dollar is like a steel wall for Cardano. If it breaks a dollar and closes below it, like the body closes below, you should be very afraid. Okay? I'm not trying to spread fear or FUD or whatever the case is, but it's like Cardano actually has daily bullish divergence on the RSI. It's one of the only ones that has it. It's just been behaving differently than Bitcoin and most of the other alts. This, I mean, really since early September, double topped, and now it's still trying to hold that dollar mark. So where a lot of assets broke their critical supports and are moving down, Cardano is really trying for dear life to hold on to a dollar, because again, you break a dollar, dude, it's like 40 cents is really the only spot that makes sense. Unless maybe your Fibonacci levels save you a little bit. We're talking from the low to the high, the 113. There's just not any like historical support. So the 1272 makes much more sense being down here close to this little peak. And if we go back in history, that's this inflection point back from like May 2nd, right? Major point of inflection. That's your supports, okay? And then break that, and it's like, well, I don't know, 16 cents. But, dude, I'm not, after a dollar, on you. Don't be surprised to see like a 50-cent Cardano again. If we enter into a real, dude, if Bitcoin goes to $12,000, if it sells off 80% like it did in previous bear market, you're seeing Cardano at like 15 cents. You understand that? Maybe even lower. You might see a 7-cent Cardano again. All right, 12 cents, 10-cent Cardano. You could see that if there's a real bear market on the way. All right, so Anybody that's telling you like, nah, dude, we'll never go below 50 cents again, that's insane. Whoever tells you that's dumb, dude. No. You know, I've seen my fair share of bear markets. I've seen my fair share of pullbacks. I had a lot of coins in 2017 that died and never came back. Ripple is a perfect example. Ripple was $3 in 2017. Okay. $3 in 2017. Now, it was a little bit of an outlier because it got wrecked by, you know, the Fed, but or whoever was, or the FEC, whoever was regulating it, they came in and kind of just squashed it. But people in 2017 were saying Ripple would be $100 by now. That's a little extreme. They were saying it'd be like $15 by now, $20 by now. And they were so sure of it, right? Bet the house on it. What's it? Where is it? What is it? Oh, it's 60 cents.
Right.
So don't fool yourself into thinking that investing in these basically startups that they can't die and not come back. All right, I could name a bunch. All right, Funfair did that, AirSwap did that, Ethos literally just abandoned the project and turned into something else. Ember coin. A lot of those coins are not back to their 2017 highs. Okay, so just Cardano is not super special. It's in the top 5, I get it, but yeah, you can see that thing back down at like 14 cents. Especially in like Solana even too. Like Solana came out in 2020. You can see that thing definitely. And I might be wrong on that. That might just be when it ended up on the chart. But let's move to the S&P 500, which actually is getting. Look at that, dude. That's a very serious hammer. So you could get a similar deal with the markets tomorrow, right? You could see some green going on in the stocks. Tomorrow, a bit of a relief after the major dumping that you've had, right? You're oversold, you have no divergence. We can take a look at the weekly time scale even. There's no divergence on the weekly either. Technically, if you stay above 4,349, that body, and can pivot back towards the upside, because you're also right at the 200-day moving average. I'm sorry, the 50-day moving average for the weekly. You're just at a level of support and the moving average. So it makes sense for you to be getting held here and get some support. And again, you know, what does this stuff often do? 50% retrace from the high to the low. It could just come up, do something like this. Get to this shoulder back here from August 30th. This right here, right? Get up, reject it. And then you have like a head and shoulders type of structure. Then you get absolutely destroyed. Then the market really gets effed. And at that point, if we're talking measured move stuff, yeah, you're back to like $4,000. That puts you down to like 4,000 with a structure like that, right? So, I don't know, dude. We'll see. But stuff looking weird, man. The Fed raising rates, potential war stuff. Uncertainty for sure, right? I don't know if it could get more uncertain than 2020 and 2021. And then 2022 came and said, hey, you want a war? You want to throw a war on top of it? Huh? You speak Russian?
Right.
Okay.
So you're telling me there's a chance?
So yeah. Don't be surprised if you see stocks in the green tomorrow. Okay? You are still below your 200-day moving average, so I mean, don't get ahead of yourself, right? Don't count your chickens before they roost and peck you in the eye, or something, whatever this saying is. The Dow Jones Industrial Average also hammering. Right? At a level that makes all the sense in the world, right? This inflection point, June 18th, down at about 33,232. Catching some love. Stocks towards the end of the close just really started getting some support and rallying a little bit there. So, who knows? I mean, it makes sense, again, that you're getting support there. You do, in fact, have some divergence, I believe, on the daily time scale, on the RSI at least, a little bit. Maybe the weekly looks a little different. Nope.
Nope.
Nothing. You fall below. I mean, you're at support. You're at support right now. So you fall below 33.12 where the hammer touched. There's a reason it held there. You fall below that. Oh, what? Where do you see the support? Here. That's like devastation. That is also a bear market, right? 10% is a correction, 20% is a bear market, officially. And then you got the 200-day moving average down there waiting for you, which you haven't seen since the COVID crash. So sorry. Just saying. Take a look at ammunition stocks. Ammunition stocks usually do well in times of fear and crisis, right? And Vista Outdoors. I love this stock all the way up from the COVID crash. It's one of my favorites. It performed so well, and now look at what it's doing. It was up 3% on the day, a major, and not even just from here, right? Go all the way back to October 2016, just this entire area over here. This entire area, okay? You're at it again, all right? You are at probably the most major level of support that you've got on this thing until, I don't know, maybe like here, like 24 bucks. You're at a very, very major level of support. And what did you just do? You just majorly, and this is a textbook bullish engulfing candle when it opens down and then closes above the entire thing. The reason crypto never looks like this is because there's no end on the days on the markets. It's 24/7, so they always kind of line up with each other. But a bullish engulfing candle, when it comes to a stock, the textbook version of it is when it does this. It opens below it and it closes above it. It's strong, okay? That's really, really strong. You barely missed Class A bullish divergence on the MACD, but you do in fact have it on the RSI, all right? It's there. So, some seller exhaustion, bullish engulfing candle at major historical support, okay? Given the context of what's going on right now, people are probably buying ammo again, which is unfortunate for people that want to buy actual ammo because it's going to get expensive or whatever, but all this uncertainty and all this stuff going on, this fear of potential war and all this stuff, people are probably going to be buying ammo again, and the gun stocks showed that today. Vista was up 3% bullishly engulfed, and Smith & Wesson also bullishly engulfed. It was up 6% on the day. So, and it's got a major gap to fill. It had that death. The reason for this was an earnings. They had an earnings call here, I think, right? December 3rd. Yeah, December 2nd. They had an earnings call. I don't know what happened. They missed the earnings, but I don't know if they said something on the call that just caused this gap to sell down. But look at where it held up, right? It held up almost perfectly from where the bottom of that initial gap part was, as well as touches back here in August of 2020, some consolidation area. Okay. So you are at a level for sure. And below this, you're looking at like 1462. But if this is going to continue and the fear keeps rising and people keep buying gun stocks and stuff like that and ammunition, this is going to continue to go up. All right. And at this point, you certainly have some divergence on the MACD, right? You've got about a same low in price with much lower, just went green today. So technically Class B bullish divergence. You also have it on the RSI, right? So you're showing divergence. You got a bullish engulfing candle, okay? Add historical support, double bottom kind of stuff, right? On the daily, on a significant time scale. Weekly with the piercing pattern, confirming this bottom potentially. Okay, so this could be a real move up for Smith & Wesson. And if we're talking again, if we just want to make the first target 50% retrace, that's a further 14% on the asset, and the stop loss just goes right below here. All right, like $15.15. And then from here, I mean, I'd probably say you fill the gap. Probably say you fill the gap, get up to about 22, maybe $20 might be my next point. Maybe like the 618. I like this peak here though. I like $21, $21.42. That gets you up to around like the 786, fills the gap. 200-day moving average is around there. All right, that's strong resistance. But yeah, take a little 14% guy, and then that move up there, man. Which at that point would be 25%. In these kind of market conditions, man, beggars can't be choosers. That's pretty good. So Smith & Wesson, man, bang bang. They could be these short-term relief if you're trying to get some gains in this crap market.
Confirmed.
Get it? I shot it. Gun stock. Okay, moving along. Let's take a look at uranium now, right? So uranium. This is a uranium ETF. Uranium bombs, right? I know it's used for like power and stuff too, but a commodity, something that's important, especially I guess in these times. But at the pattern completion zone of a bullish shark harmonic, right? At historical support. Okay. So if there was going to be a rally, the only thing with this is you don't really have any divergence. There's no divergence on the RSI. You don't really have it yet on the MACD, at least on the daily. We move it to the weekly though. As long as you pivot above $17.77, then you do have some hidden bullish divergence going on, at least on the MACD and almost on the RSI, right? It's like the same low kind of deal. But certainly some continuation factors for uranium. Maybe you just come up to this peak back here, some flex point from June 7th, right? You just kind of do something like this. All right, then you've got a head and shoulders, which would be awful. But, I mean, maybe you get back there. I could see you getting back there from this current level. But you got to start developing the divergence or anything, right? It hasn't even started trying to get back to the green yet. So I would give it a couple days to confirm something on this, but interesting. Move it to the 4-hour, and it's a bullish engulfing candle. Again, no divergence though, so nothing to get too excited about, but it's something, right? So yeah, I think that's going to do it though. That's pretty much all I had. Not a very interactive stream this time. It's just how it goes, man, I guess, sometimes, right? Some are good, some are bad, some are in the middle, some are great. Some are just me and Tay, just chilling. And a bot friend, you know? But, yeah, let me move back to Bitcoin real quick just to see if it's doing anything in the amount of time that we were doing that. Nothing. It hasn't moved. 36,206 just hanging out, trying to decide what to do. All right, when it doesn't move like this, people just don't know what to do. Everyone's just sitting around waiting, which is not good under these circumstances. You want people feeling confident that there's at least maybe some scalping opportunity here, right? That this is the bottom, and they're going, okay, well, I mean, you know, these assets oftentimes will retrace 50%, right? So, I mean, if I really wanted to, I could probably skim 5% out of this real quick before selling off. But they're not. That's not happening right now. Everyone is just, look, it's just going sideways. Everyone's just kind of hanging out. All right, there's uncertainty still somewhat implied. All right, so maybe it comes down, holds the 50, and rallies up to the 200 or something. I don't know. We will find out if we get a little bit of relief, but it could just dump again, man. Right? People could just get tired of waiting for somebody else to buy, and it just dumps again, and then hey. Wake up to a $30,000 Bitcoin. All right. All right, that's gonna do it. If you are, wow, things always way behind. If you're watching this later, if you're in here right now, I appreciate you being here. I appreciate you watching. I appreciate the support that you take, I guess, what I say with some conviction, some seriousness. I hope you learned something. If you have any questions, if you're interested in learning more about swing trading, the markets, whatever, join the Discord. The link is at the top of the chat. This is all free. I'm just on here just doing analysis because I like it too. It gives me something to do. I like making the thumbnails and stuff, man. It's fun. And I would love to just spread the word to inform people in these markets. There's so much crap out there. So much moon boy stuff. And if you're not careful, man, you can get really hurt by it. And, one of the reasons I do this as well, I was one of those people, man, in 2017. I was one of those guys that I would just watch YouTubers say that things were going to moon, and the market conditions were crazy, so everything was going off. And I thought I found the formula, and I ended up getting absolutely destroyed. I lost a ton of money, and after learning this kind of stuff, it's been much better. So that's why I'm on here trying to spread the word, man. I want people to just be successful in this stuff, and just have some people to talk to about it too. Something I enjoy. So, and that's enough. Join the Discord, the Instagram, the Twitter, hit the like button, hit the subscribe button, and yeah, hopefully I'll see you in there. I will be back on Wednesday to do another stream, but until then, keep it real, keep it calm, cool, and collected. More important than that, as always, keep it technical. All right, boys.
Became weeks, it felt just like the night before. You were slowly fading in my mind. When you left, I was so completely gone, but now I'm sure